Hello, welcome. This is an interview that I'll be having here with our good participant, James Lawrence, who is Head of Investment Proposition at Smart Pension. James will be speaking at the upcoming Private Markets Investment Europe 2022 Summit on the 30th and 31st of March. In advance, we wanted to get his thoughts on private market usage in net zero targets, which he will be speaking more on at the event. James, welcome.
Hi, good to see you.
Very good. So, kickstarting all of this, first question we have, what role do private markets play in the push for sustainability and net zero targets?
They've got a huge role to play, really, as you'd expect. And I guess there's a couple of main reasons for that. Firstly, because companies these days are staying private for longer, particularly companies, building themselves out to build climate solutions. I think they're holding off on IPOing and becoming public. So investing in private markets from that perspective really is necessary to capture that market. And secondly, because of the real engagement you get with private markets investments, you get a real high level of engagement by investing in a private market, equity or bond. Really, you get to own much more of the company. Usually, you get to have a seat on the management board, rather than a public company where you just own shares, and it tends to be a lower level of engagement and also ownership. So, yeah, private markets I think is huge, particularly when you've got lots of new startup companies, lots of really interesting small companies trying to find different solutions. It's really critical for solving climate change.
Absolutely. No, very, very, very right on all fronts. On to the second question. Are there any key challenges investors would face when looking to utilize private market assets?
So I come from a pensions background, so particularly from a defined contribution pensions background. And the main issue we have at the moment is cost of private markets, but I don't think that's limited necessarily to just DC pensions. I think that's probably something that's across the kind of institutional investing space. Private markets, particularly kind of private equity, tends to come with significant costs. Traditionally 2 and 20. I think sometimes we're seeing lower fees than that now as private equity funds are looking to break into new areas and new revenue streams. But the cost is still really prohibitive. So, in pensions, we have a charge cap of 0.75%, and realistically funds that we have to build are well below that. So cost, I think, is probably the first issue with private markets and accessing that capital. I think secondly is the governance around private markets is a lot higher. So because of the nuances with private markets, particularly things like legal agreements, different arrangements around custodians, etc., private markets become something that becomes a lot more difficult to govern from a investor and trustee perspective. So you really need a kind of significant size, but you also need a significant governance bandwidth, really. So yeah, cost and governance are probably the two main difficulties with private markets.
Absolutely. Definitely see those issues coming to the forefront every time. Are there any potential ESG risks or limitations when utilizing private market assets, and what might they be?
Yeah, there's probably a couple of risks, really. The governance of within private markets of the kind of investments themselves tends to be different, not necessarily worse, but publicly listed equities in particular tend to have kind of high levels of scrutiny, particularly kind of developed markets versus emerging markets. So it becomes very clear when a publicly owned company is not doing something correctly. They've got different standards to adhere to, and there's the scrutiny in general, which is very high on publicly traded investments. Whereas private markets, I think sometimes the scrutiny is a bit lower because of the management structures, because of the ownership structures of companies. I think you tend not to get as much scrutiny on what they're doing, which can lead to things like greenwashing in terms of what they're providing, presenting to the market. I think, as I said before, it's private markets are incredibly crucial for this, and a lot of the people that will be solving issues around climate change and net zero issues will be privately owned companies and smaller companies. So it's definitely not a deal breaker. But I think, yeah, one of the risks is probably that kind of oversight and real shining a spotlight on transparency of those companies.
Absolutely. What regulations should investors note when considering their net zero goals?
Yeah, so there's lots of different regulations that apply differently to different people. So, you know, again, within the pensions world, we've got pensions legislation and regulations that we have to very keenly adhere to, which, if I'm honest, isn't particularly set up well for private markets currently. I don't think, you know, there isn't anything that's restrictive within the regulations, but also it kind of does imply a lot of limitations in investing in private markets, from kind of daily liquidity and those kind of you know, implications in the regulations, and fiduciary duty as well. I think is something that needs to be revised from a private markets and the ESG and impact perspective. There's also lots of broader, not necessarily regulations, but kind of pressure groups and initiatives that are really useful. So people like the IIGCC and TCFD in particular, lots of different acronyms, but they are very useful initiatives to help people think about private markets, and some of them are kind of quasi-regulatory now. So TCFD in particular is becoming, well, it is kind of regulatory from a pensions perspective, and I know it has a lot of broader uses as well. So that one in particular is something that's really important, and I think does a pretty good job of getting to the crux of kind of climate and impacts on net zero and private markets in particular. TNFD as well, so the nature related financial disclosures, I think will become critical as well in this, and I think that'll be baked into legislation in the future as well. So yeah, lots of different angles from a kind of regulatory and initiatives perspective.
Absolutely, thank you very much. Finally, why is it important that investors attend this year's Private Markets Investor Summit?
Because I think it's going to have some really, first of all, great people speaking on roundtables. It's going to have some really interesting topics in particular as well. So, you know, I'm discussing net zero in private markets, but it would go much broader than that. And private markets is such a hot topic right now in lots of different spheres of institutional investing across insurance and pensions and others. And there's lots of different barriers that need to be broken down. So that's one of the main reasons I think it is really helping to break down those barriers, engage with different people, and really together as different industries collaborate as well, we can find solutions to lots of those barriers.
Absolutely. Thank you, James, for sharing your views there, and we look forward to welcoming you to the event in March.
Thanks very much.